All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out here today. Let's kind of build on what we talked about yesterday. And then after the class here, technical analysis, we'll go out. We'll look at some of the various trade setups and some of the things that we're looking to do into the close here. Um, but yesterday we talked about the three different types of technical indicators. We basically had oscillators, trend indicators, and then volumetric indicators. Okay. Now, one of the things that some of the new indicators try to do is they try to incorporate uh, an aspect from all three of these. They try to incorporate an oscillator aspect, something that measures whether the stock's high or low. They try to incorporate a trend aspect. They try to incorporate a volumetric aspect. And they try to kind of build their system with that. One of the first individuals to kind of put all that type of stuff together was a gentleman by the name of Wells Wilder. And Wells Wilder, he's famous for developing the RSI, uh, which has some oscillator properties and some trend properties. He's also famous for creating what's called a parabolic SAR, and which basically is kind of a trailing stop based on the chart. And he also developed something called the ADX, okay, the average directional index. I wrote a book trying to put all these together. Wells Wilder, he's kind of famous for saying that, hey, if you gave him the RSI to trade with, he'd never make any money. He needs other things. And while his system that he put together with the RSI, the PSAR, and the ADX, while it really doesn't include much from a volume standpoint, it incorporates stop losses, it incorporates the oscillator aspects, and it incorporates the trend aspects. So I want to go take a look at these three indicators with you, kind of show you how he put those together. And then we'll break down the ADX a little bit further, and I'll show you some different ways to use it. One that we use in our managed fund to hold on to stocks for 3, 4, 5 month periods to understand, okay, what are more of our longer term holdings, and another one that we use for currency. For forex trading, when we euro dollar and the yen versus the euro, different things like that. So let's go out and let's go start by just looking briefly here at the RSI. Okay, um, we put a stock in here. I'll come down and change my chart around. I'm going to just take out all other indicators other than the Wells Wilder indication. So overlays, we're going to do parabolic SAR. Okay, and I'm just going to use the parameters that are there. Indicators, we're going to put a relative strength index, an RSI. We'll put that on top, and then we'll take and do an average directional index, an ADX. Now, on stock charts, we can do an ADX or we can do a directional movement with ADX. I'm going to put both of these on here so you can kind of see what that difference is. But these are the Wells Wilder indicators. Okay, click on Update, and it'll bring up the chart for us. Okay. Let's start with the RSI. I'm not going to spend too much time, but the RSI is basically an oscillator. It's measuring whether the stock price is high or low relative to its recent history. So on cases like here in September, where the stock price surges, the RSI is going to be high. Okay. Overbought above 70 doesn't necessarily mean the stock has to go down. Oversold below 30 doesn't necessarily mean the stock has to go up. Okay. Wells Wilder generally believed that as long as the RSI was consistently staying above 50, you have an upward trending stock. As long as it's staying consistently below 50, you have a little bit more of a downward trending stock. Okay. Um, with the RSI, with the RSI, there are several little things that can be done or can be used. Perhaps the most famous way to use it is with something called a failure swing. So let's just take, let's see here. Let's take Johnson and Johnson. It's not the greatest example of a failure swing, but we can see a little bit of this. Okay? And a failure swing is either a bullish or a bearish reversal. Okay, we have very few failure swings in the market that are bullish reversals. Okay, most of them are just simply bearish reversals. And the whole concept is the RSI goes into an overbought period. Okay, so number one, RSI overbought. Okay, second step is RSI moves below 70. Third step, RSI moves higher, but not back above 70. Okay, so we get this uptick. And the fourth step is that the RSI breaks the previous low. Okay? So kind of 4 steps to a failure swing. Okay, RSI overbought, RSI moves below 70, RSI moves back up but not back above 70, and then RSI breaks down. So what does that look like? Well, step 1, right here, above 70. Step 2, the RSI moves below 70, goes down, right? The RSI is falling. Step 3, the RSI bounces. Okay, kind of like what we have here. It bounces, but never goes back above 70. Okay, doesn't exceed the previous high. And then the RSI starts to go down again. And when the RSI breaks, okay, this when it breaks this low, okay, that it had created, okay, on step 2, that's a sign of a failure swing and that the stock is ready to fall. Okay, that the stock's ready to pull back. That is a bearish failure swing. The bullish failure swings are just the opposite. You have the RSI oversold. The RSI moves above 30. Then the RSI starts to fall, okay? Starts to fall, but doesn't go back below 30. And then the RSI kind of breaks that previous high. You have a real strong bullish failure swing. Okay? Perhaps the most accurate way to use the RSI in the market, okay, is with these failure swings. And one of the things that Wells Wilder was credited with developing here. Okay? Now, like I said before, he would say, "Well, I can't make any money just doing just trading with the RSI." So he put some other indicators together here. Okay, this next one here, we see these dots within the chart, right? We got these dots all over the place, and these dots are what he referred to as the parabolic SAR. Okay, support and resistance. Okay. And what they do is they will trail the stock when it's running. Okay? And the whole idea here is that when there is a reversal to where the dots go below the stock, that's a buy point. Okay? Once the buy or the momentum or the trend runs out, notice how initially the stop is quite far away, but the stop plays catch up as the stock goes flat. Now the stock pulls back a little bit. You have the dots moving to the high side above the candles. At this point is where you stop out of your trade. Okay, where you stop out of your trade. Now, some people will say, well, let's just buy it when the parabolic SAR turns bullish, like here in October, and then we'll sell the stock when it turns bearish or short it and use this as a stopping mechanism. Okay? But the danger in that is just look during this time period. How many times did it flip-flop? Okay? If you're shorting it here, now you're getting out of your short up here and adding long. You're getting stopped out of your long down here, adding short up here, then getting stopped out of your short. You're getting bounced in and out, okay? a lot of whipsaws in regards to the parabolic SAR. Back here in June, went on that period. So we can see nice trends where we say, man, this parabolic SAR, I mean, that followed the upward trend fantastically, or the downward trend fantastically. But it doesn't necessarily mean that the stock is ready to go up or down. It just kind of gives you a stop point. So here on Johnson & Johnson, right now, the dots are below. Okay, the dots are below. Why? Well, the parabolic SAR had been moving lower, but on that bounce in Johnson & Johnson, it kind of stopped out the shorts and said, okay, now time for the longs to get in. But look how far away the stop is. Okay, the stop is quite far away. If the stock goes straight down from here, by the time you're done with an option, you're done, right? But that's the whole idea, the concept. You can adjust parameters, you can tighten it up, you can say, well, I don't want to be stopped out as much. You can give it a little bit more, make it a little more lax. This is kind of how he developed it with this parabolic SAR. His whole idea was to use the parabolic SAR when the stock was trending. Okay, not when the stock was oscillating and the parabolic SAR would create whipsaws. And he understood market trends about 40% of the time. And so when he's in, he talks about when he's in a trend trade, just following it with the parabolic SAR and trading it either higher or lower until there's that stop out. Okay. Well, if he believes that the parabolic SAR is very effective when it comes to a trend, and he has the RSI, which is an oscillator, he needs something that will tell him whether the stock is more likely to go on a trend or not. And that's where he developed the ADX, the average directional index. Okay? This is a very simple indicator, okay, but commonly misunderstood. The indicator simply is as such. Let me get these dotted lines in here. Okay, Wells Wilder believed that above 25, okay, when the ADX was above 25, the stock was in a trending mode, okay? i.e., pay attention to the parabolic SAR, right? So when the ADX is above 25, the stock's in a trending mode. Then he says when the parabolic SAR is below 20, when the ADX is below 20, the stock is in consolidation, or he refers to it as non-trending. Okay, the stock's essentially non-trending. Well, you say to yourself, well, okay, great, easy definitions, but what about this middle ground here between 20 and 25? Okay, and he basically says, there's a little ambiguity here. Okay, there's a little ambiguity in between this 20 and 25 area. Okay? Now, let's take a look just with Johnson & Johnson. You can kind of do this with any stock and say, okay, what happens here? Well, the ADX pushes above 25 right here, okay? So the stock is trending, right? Well, it's already been trending a little while, hasn't it? Okay, we have a little lag there. And, the ADX starts to fall here. But a lot of people will confuse a rise in the ADX as rise in the stock and a fall in the ADX as a fall in the stock, okay? The ADX and stock direction have nothing to do with each other, okay? The ADX can rise when the stock's going down and fall when the stock's going up. The only thing the ADX does is show trend strength. So when the ADX is above 40 back here, that's just saying, look, the trend, whatever the trend is, in this case happens to be higher, but whatever the trend is, it's strong, okay? And you can look to play that trend. Okay, what's the ADX saying right now? ADX has fallen below 20. It's basically saying there's no trend. Johnson & Johnson is in a consolidation mode. Wells Wilder wouldn't be buying Johnson & Johnson here based on these indicators, expecting a major upward trend. He basically says, okay, we're below 20. The stock's just going to consolidate. Okay. And in the context of 3, 4, 5, 6 weeks, that tends to happen. Okay? These also tend to be the periods where the parabolic SAR is a lot more whipsaw, or has many more whipsaws, okay, overall. Where when the ADX is above 25, the parabolic SAR works a lot better. Okay? So that's the basic concept with the ADX. Okay, well, is that enough? Okay, and so he went a step further and he added what's called a directional index. He was basically looking for a way to decide when to get in and when to get out. Okay, so he puts these mathematical calculations together. Again, if you're interested in the math, under chart school here at Stock Charts, they have all the math for you. Okay, but basically he draws a positive directional index, a green line, and a negative directional index, a red line. And the concept here is very simple. You buy when the green line goes above the red. You sell when the green line goes below the red. Okay? When the positive directional index goes above the negative directional index, you buy it. When the positive directional index moves below the negative directional index, you sell. Okay? And he would overlay this with the ADX and say, you know what, if the ADX is rising, then I can trust the buy signal or the sell signal. But like back here in September, when the ADX, our black lines falling, I can't really trust my directional index. They're going to give a lot more whipsaws. Okay? So by the ADX basically saying that the stock is trending, now you can trust the directional index, the green and the red line here. Okay? That's kind of how he put it together. And he basically said, okay, you know what? We have some good relative strength. Okay? Some good relative strength. Our ADX starting to rise. Our green line's moving above our red line. Our parabolic SAR puts our stop in and it says, all right, let's ride it. Let's go. And as long as the stock stays, with the parabolic SAR stays below the stock, you're good to ride it. Okay. So, a pretty complex system for when it was developed. We didn't have all the same type of computer technology that we have now, but in many ways, groundbreaking for technical analysis in the fact of putting various indicators together. You had people like Gerald Appel and others, who had developed, Gerald Appel with the MACD. You had the stochastics come out in the 50s, the MACD in the 60s, and but nothing where one individual kind of looked at a bunch of different aspects in regard to technical analysis and tried to put them together. Okay? Is this system really tradable with the parabolic SAR, the RSI, the ADX, and the directional indicator? I've tried. I've tried several times, several different markets. I've never had a lot of success with it. It's more of a stock system where you're looking to hold on to that stock for 3, 4, 5 months, or ride some of the just the weekly types of moves. Okay, from a short-term trade standpoint, okay. But I spent a lot of time dealing with this system from Wells Wilder because my interest was, hey, is there a technical system that we can really kind of use and kind of gravitate to and say, you know what, this is going to be good. It was about my survival, with the managed fund and getting into good trades and good investments. And so we kind of toyed around with it. Okay, we toyed around with it a lot. And one of the major changes that personally I made to the system was substitute the 7-day moving average for the parabolic SAR. They're not the same thing, but you're going to notice, in fact, let me just put the 7-day moving average on here, okay? Let me show you what that looks like. If you substitute the 7, it's going to follow it a little tighter, especially from the beginning, than the parabolic SAR. The parabolic SAR, the stop is incredibly large at the beginning. And generally speaking, when the stock starts to push below the 7-day moving average, your parabolic SAR is already switching. So the 7 kind of gives a tighter stop throughout the beginning of the trade and does kind of the same thing or has the same aspect in regards to the end of the trade. So kind of almost the same thing. Okay. The 7 is a little tighter. The 7 is going to give you a few more whipsaws. Okay. The 7 is much more accurate in regards to trending environments, but in the same way as this parabolic SAR. Okay. And for me, the 7 is a lot more simple. Okay. A lot more simple. All right, so, parabolic SAR, 7-day moving average. Okay, there we go. Well, what about this ADX? I mean, this ADX is a really neat indicator, and really nice to, get into trades when the ADX is on the rise. Okay, let's take something like Tesoro here. Okay, Tesoro. Notice how the stock was falling here August, September, and the ADX was rising. What did that say? Well, the stock is trending. Okay, the ADX rising only says the stock is trending. How can we tell which direction? Well, from our green and our red lines down here below, our directional indexes. Okay, so we know we're in a downward trend overall. Now the trend reverses. Look, our directional indexes switch. Okay, they switch, and the trend reverses. Well, what's been happening recently? Well, look, the ADX has been falling. What's that telling us? That we're in a non-trending environment. Okay, buy low, sell high. We're consolidating. Okay, similar to what we've talked about with the Bollinger Bands on Tesoro. Okay, you can look to buy it when it's weak and, don't necessarily want to chase it when it's strong. That's what the ADX is showing us. The directional index here, the green and the red line, is still showing bullish. They've not crossed and become negative. The RSI is still showing bullish overall. Could this break down? Absolutely, and go on a downward trend, sure. But the DI, the directional indexes, the RSI breakdown, they would show that to us. For now, all the ADX is showing is that there's no real trend. So buy on short-term dips, sell on short-term rallies is all the ADX. And this whole system of Wells Wilder is showing us. Notice the advantage here of the parabolic SAR. Parabolic SAR basically says stay a buyer. The stock isn't really breaking down. Stay a buyer, stay a buyer. If you're using the 7 throughout this consolidation and saying, well, I got to buy above the 7 and sell below, you're getting whipsawed out quite a bit. Okay, quite a bit. Where the 7 was really smooth on the way up here, now it's going to whipsaw you all over the place. And the 7 won't really have as much significance until we start to see the stock resume a trend. What does that mean? ADX start to move higher. Okay. So, things I bring up Tesoro so you can see how the ADX can still rise when there's no trend. And essentially during this uptick right here in October, we saw the ADX fall. Why? Because, well, the ADX is looking at a longer period of time. And, you look September, October, even though you had some down, some up, you really have no real trend. Okay, no real trend. One of the things I do like, I like this ADX, but one of the things that's very similar to it are the Bollinger Bands. Okay? And we talk about the Bollinger Bands all the time, okay? And what their use is. That essentially when the Bollinger Bands are tightening, okay, when they're going from a wide period, like here in December, and they start to tighten or close in on each other, We know the stock is consolidating, right? Well, the ADX is falling. And it happens it's quite common that when the Bollinger Bands are contracting, the ADX is falling. And when the Bollinger Bands are expanding, like they were here in November, the ADX is rising. Okay? So you say, well, Jeff, why don't you have the ADX on your charts if you like it so much? Well, the Bollingers, they kind of show the same thing. Bollingers came by a little bit later after the ADX, but they kind of show the same thing, right? They kind of show the same thing. And that's basically, is the stock trending or consolidating? Trending or consolidating. So right now with the tight bands, with the ADX, we know the stock's consolidating. Now, the one thing the ADX will have trouble doing is getting us in when it's ready to move. Okay? Notice here that by the time the stock breaks out and the ADX starts to trend upward, you basically have missed a lot of rally in the stock, 2-3 days worth of rally. The Bollinger Bands and piercing that upper band will give a quicker signal than the ADX. And that's one of the advantages to it, is the Bollingers tend to give a little bit of a quicker signal. What do you sacrifice by a quicker signal? Well, you sacrifice a little bit of accuracy generally, but you get better risk reward scenarios. Okay? So Bollinger Bands, ADX, fine. Now, one of the things that is really maddening is trying to use this directional indicator. It looks pretty smooth here on Tesoro, right? Overall, looks pretty smooth, and there's some stocks where, okay, it'll fit, it'll be smooth. But then there are others where it is absolutely maddening as far as in and out and bullish, bearish. Take a look here at Pepsi. How are you supposed to trade that? It finally triggered a bull signal 2 days ago, as Pepsi's bounced already, and, it's in a non-trending environment, a little tough to trust overall, okay? So what can be used? Okay, what can be used instead? Because the whole concept here of these directional indicators is a really clever concept and really adds a lot of value when you know whether your stock is trending or not, okay? So basically, fine. All right, we're looking for a stock that's trending. How can we say where are better trigger points? Well, one of the things we used in our fund managing days when we were dealing with buying and selling stocks, okay? We didn't really use this very often with options. But we put on an indicator here to substitute the directional indexes, okay? The red and the green line. We added a stochastics. Now, you're going to say, well, Jeff, the stochastics that you have here doesn't look the same. And you're right. We changed the parameters on it. Okay? We changed the parameters to 39.1. This is something that John Murphy, in his book, Technical Amount Analysis in the Financial Markets, that he kind of first started to talk about this 39.1 concept on the stochastics. And I spent time playing around with it years ago. We messed around with it, did a bunch of different things with it. But one of the things that I found is it was a really nice replacement for the directional indicator on the ADX. And that it would actually give more smooth signals and fewer whipsaws. Okay? And it's as simple as this. All the indicator is doing is showing whether the stock price is high or low relative to its past 39 days. You'll notice I'm not putting a %D on there. I don't care to smooth this and look for black lines crossing red lines or anything like that. All I'm interested in is whether the stock is higher or lower relative to its past 39 days. And that's where the 50 mark comes in. Okay? The 50. And the buy signal, move above 50. The sell signal will move below 50. Okay? Now, obviously, matching that up with a trending environment is key. So why do I want to be looking at Tesoro more from a bullish standpoint overall? Okay, and say, well, even on pullbacks, I want to be buying Tesoro. Dipped in a little bit yesterday to Tesoro. Why? Well, because we're still trading in the upper end of the range. We're still on a bullish mode. We've just been consolidating. Okay. When did that trigger? Back here in October. Okay. There can be whipsaws. There can be whipsaws like this. But most of the whipsaws happen in an environment where the ADX is falling. Okay. So one of the things that was nice is, okay, now we can see the ADX starting to rise. The 391 is trading below 50. Okay, the STO is below 50. You get a bounce here in Tesoro. Okay, you get a bounce. Strong trend building to the downside. Want to look to sell into that bounce and to continue to play it lower. Okay. Now, we have the ADX pretty much flattening out here at the beginning of October as this bounces. Not as apt to want to sell that bounce. So the 391 is a nice replacement for the red and the green line down here in the ADX or in this directional indicator. Just a very nice replacement. You're looking to trade stock. You want to hold something for a while. Okay, you say, you know what, I'm bullish on this or bearish on this. For the next 5-6 months. This becomes a real nice indication. Okay, I want to get into Hewlett Packard on the upside, and that's a shift from the way I thought most of the year, where I really kind of wanted to be in on the downside. But Hewlett Packard's been making a few shifts. Some of the technicals are changing. The 391 is still bullish, but what's happening with the trend? Okay, the trend remains higher, but the trend is weakening. Okay, the trend overall has been weakening, makes it a little bit more difficult to try to go out and chase something like Hewlett Packard here. Okay. Nucor, pulling back a little bit more today. I like Nucor. What's it done recently? It's made a fresh move back above the 50 here. Okay, fresh move back above the 50. Look at the ADX. The ADX is low, below 20. What's that say? We're in a non-trending environment. Okay, below 20. But what's it starting to do? Because of the recent action, the ADX is actually starting to move up. We see that Nucor sets a higher low here around 53, does some sort of bullish engulfing and starts to push higher. Well, what are we going to see? We're going to see the ADX rising a little bit more. We'll see the 391 in a bullish territory. And that'll say, look, we're dealing with something that is starting a brand new upward trend. The trend strength is growing. We want to be looking at it from alongside and using any kind of pullback to get in. Right? We take Boeing. Okay, Boeing for example. Okay, notice what's going on. We've been in a consolidation mode. Okay, you'll say, well, Jeff, why do you expect a trend when the ADX is below 20? Okay, the ADX below 20. Why should we expect a trend? Well, take a look. Okay, we can oftentimes get in early by buying in on these non-trending environments, like back here in August, September, and actually anticipating a breakout or a trend to form or to materialize. Okay, by the time we wait for the trend, we do miss a good chunk of it. We can generally still ride it, but by the time we're waiting for that exactness, we are going to miss a little bit. Okay, so anticipating it and even saying, okay, we're above 40 on the ADX and saying the trend's been really nice, but we're above 40 on the ADX. Okay, you know what? The trend's been good. The trend strength is strong, but it's likely not going to continue to be as strong. It's probably due for some sort of consolidation period, and we'll wait for that consolidation overall. Okay, Tesla. I see you guys talking about it in the chat here. Okay, what's Tesla been doing? The ADX been coming down. Okay, non-trending environment. What does that mean? I want to buy dips and sell rips. Okay, so we fly up. We start to break down. I want to be looking to be a buyer when it breaks down and the seller when it breaks up. Okay, overall, I've got a little bit of bullishness on the 391. Okay, with it moving above 50, but we're not really in a trending environment. Okay, so it's not as easy really to trust. So this whole 391 concept will kind of help you stay into longer term trends, okay? And kind of use, okay, when are we in trending, when are we in non-trending type environments by adding the ADX. You can play with the parabolic SAR, but put some sort of combination together. This was a very common chart format for us to look at as fund managers when we were looking at our stock holdings. We would have a 7-day moving average, a 20-day moving average, um, and then we would have the 391 stochastics and the ADX down here below. Okay. Now this is nice and it works really well with stocks. Okay, works really well with stocks, especially if you have kind of some of the fundamentals on your side. If you're bearish, you're dealing with something that's overvalued. It tends to work better than if you're dealing with something undervalued. But it really doesn't work well with currency or commodities. We just found it did not have the same zip, the same pop. And so one of the things that we did is we substituted out our 7-day moving average and our 20-day moving average, and we just changed them up a little bit. We loosened up the 7 and turned that into a 9, and we tightened the 20 into an 18. And we use this 9 and 18 to essentially replace the directional indexes here of the ADX. The whole concept was when the 9 crosses above the 18, it's bullish. We want to be buyers. When the 9 crosses below the 18, we want to be sellers. For stocks, it's not as good, okay, as it is for currency pairs. Those of you who like to trade forex or get into trading the currency, you could see some of it. You can kind of do some of it with some of the indexes like the UUP, but it's going to work better on 60-minute, 15-minute charts on with forex essentially. Okay, so what do we have here? We have a rising, the ADX starting to rise. We have the 9 cross below the 18. Okay, likelihood the dollar is going to fall, and it really kind of just is another way to substitute out this directional index here. Now, we basically, for us, we called these the 391 and the 918. And we would kind of use them, the 391 for stocks, the 918 with the ADX for currency commodities. But we did find that it was good for the multi-week, but it really didn't translate very well onto 15-minute charts or 30-minute charts when we're trying to add this 391 stochastics. Okay. This 391 worked pretty well on the hourly, the daily, the weekly, even the monthly was interesting. But when this 391 would go into a shorter time period, it lost a little bit of accuracy. Where the 918, okay, this whole 918 concept on the weekly, monthly, daily, okay. But as you broke it down and got into shorter time periods, the hourly, 30, 15, 5-minute, it grew in accuracy quite a bit. Okay, quite a bit there. So a couple things for you to play around with. This is kind of how we took a very basic system, or I should say basic, a very, very nice system developed by Wells Wilder, used some of the newer tools, tweaked them, tested them, and these are some of the changes that we essentially adapted for our own trading from what Wells Wilder has done. And when it comes down to it, most technical systems out there, okay, where you put a variety of indicators together, they are some sort of adaptation of something that's already out there, okay? They just term it in a different way. They'll maybe add a different indicator, but yeah, maybe it's showing the same thing. I mean, the stochastics and the RSI, they're kind of showing the same thing, right? I mean, we could try to use the RSI, just the stochastics was easier, okay? and and go from there. Yeah, Matt, did we ever auto trade with the 918? No, I didn't. I didn't. We never really auto traded the currencies. In our funds, we weren't looking to day trade the currencies. Occasionally we would have some fun with it, but generally with the currencies, we were looking for longer term moves. In general. All right. So have you go out and play with those? Any questions? Please let me know. Happy to help you out. We'll have our fifth and final class on technical analysis on Thursday, and we will attack it from there. We'll show you some other things, some technical tricks out there, and some of the ways some of the other systems have been built out there. Thanks for hopping on, and we'll talk to you soon. Take care.